who doesn't want tax-free retirement income? Because if you look at the traditional advice, most people out there, Steve, all of their income in retirement is going to be taxable. Very few people will have tax-free retirement income. The problem with taxable income, the biggest elephant in the room, we have no idea what taxes will be 10, 20, 30 years from now. So why not build up a portfolio of tax-free retirement income beginning now, so you don't have to worry about that portion of your money being taxed in the future? So this is one of my favorite topics. Kind of paying taxes, we help people create more wealth and pay the least amount of tax possible. This is one of the ways we do that.
Yeah, and you and I have done some more in-depth videos about this, but what you often can show the impact that taxes have and how this impacts clients in terms of the uncertainties. Number one, the uncertainties leading up to retirement, but then also in retirement, there's such a mixed bag of issues if you don't have this separate tax-free bucket, which we do talk about a lot as well.
Yep. And when someone thinks tax-free or a financial advisor talks tax-free, it's a Roth IRA. Well, there's a lot of limits on a Roth. You've got to wait till you're 59 and a half to access the money. It's tied to the market. You're going to get the volatility. Anyway, there's a lot of strings attached to a Roth IRA, keeping it tax-free, but there's also a lot of risk because there's no guarantee in that Roth IRA account. What we're talking about today, and we're going to look at some real life numbers, is using a high cash value whole life insurance policy that is properly structured to maximize cash value growth for that future tax-free retirement income. There's really no limit to the amount of money that you can put in per se. I mean, we've got to look at everyone's situation individually. There's no 59 and a half penalty. You can take money out anytime you want. You can turn it on, you can turn it off. And there's no market risk. I mean, you're going to make money every single year in the policy. So let's take a look at some real life numbers on my tax-free retirement income design. The way this is set up, it was $50,000 a year going into a policy for 125 divide 50, 25 years. Okay, so for 25 years, this 40-year-old put 50,000 a year into a high cash value whole life policy. And starting in the 26th year, at the age of 66, they're done funding, Steve. They're not putting any more money in. They're now ready to start taking out tax-free income. And you'll see this column titled income. They're going to begin to pull out 180,000 a year. Now, for today's simple example, I'm keeping the 180,000 a year consistent. Could he take out 50,000 one year and 200,000 the next year and 75,000 the next year? Yeah, that's all flexible. 180 for 20 years. And this 180,000, because it's tax-free, there's no reporting to your CPA or accountant. This does not show up on your 1040 tax form. It truly is tax-free retirement income, and you're getting it from your cash value and from dividends. Well, what I like to show is the end result. So at the age of 85, and assuming life expectancy, he passes at age 85, this 180,000, we're going to take 20 years of him receiving this money times 180,000, which would give him 3.6 million tax-free. How much did he put in? Only 1.25 million. So Steve, I want this to be like a boom moment for everybody. He put in 1.25 million. He's taking out 3.6 million, 100% tax-free. And frankly, 3.6 million tax-free, depending on your tax bracket, it's going to feel like 5 million taxable. So if you got $5 million in a 401k or IRA, you pay the tax, you net down to 3.6. This is remarkable. I want people to feel the power of what we've just shared here. 1.25 going in, 3.6 million coming out, 100% tax-free.
And how much death benefit is still left at that point?
Yep, age 85, there's still 1.16 million of tax-free death benefit that will go to his beneficiaries.
See, so that's powerful too. This policy is pretty efficient in terms of how it's designed. It's not drawing down like 100% even of the death benefit.
No, and you're an estate attorney, right? You love this. You love to share this idea with people that it's checking all these boxes: guaranteed returns,
Yeah.
access to cash, tax-free income, death benefit, legacy planning, right, for their estate. What a
Yeah.
remarkable product, which is why you call it the ultimate asset.
You were reading my mind there. So that's right. That's why we call it the ultimate asset. Very terrific example, the tax free retirement strategy that people don't talk about. And I appreciate you sharing it. Thanks so much for joining me today. If you like these topics, stick around. We're going to have other topics like this. We've been talking about it for years, and we're going to keep rolling them out. Give us a comment, and I appreciate you watching. See you in the next video.